I think that markets are starting to price in whether we're going to have a V-shaped recovery or a U-shaped recovery, and you've had guests on both sides of the debate, but the fact that the market has held in so well, I think the market is pricing in some type of V-shaped recovery that would start in the third quarter. Which would imply, that we'd have a 2-quarter recession in the first and second quarter. So I think that's probably, just from a very big picture standpoint, why the equity markets are hanging in as well as they have.
Yeah, I mean, 1 out of every 5 S&P 500 stocks is actually higher year over year. Of course, all the big FANG names, the big technology names, many of them have held up as well. Do you worry, though, Rob, that everybody is kind of, again, almost like pre-outbreak, crowding into the same names?
Well, we'd certainly like to see a little more breadth, Brian. There's no doubt about it. But at the same time, I think we'll take whatever good news we can get at this point. Historically, equity markets start the next bull market during a recession. We may already. Well, let me back up, and I've said that we may have a couple more months of this recession and then a recovery. And the S&P 500 may already be in the next bull market. We're 600 points roughly off the low, which was 2237 on March 23rd. This is the equity markets are kind of playing out historically along the lines of what we see during a recession.
Yeah, I mean, it may be even worse for the small cap stocks, Rob. I mean, the S&P small cap 600 is down 30% in the last 90 days. I mean, the ones that pretty much have all their sales exposed to the domestic U.S. economy, they are not global in nature. Is there any opportunity there, or is it still too early to get back into the small cap companies?
Yeah, Brian, I think it's probably a little too early on the small cap side. Overall, we continue to market weight stocks here, but the dollar is probably going to continue to sag here. That's going to help the big cap growth companies. We'd overweight there, and as we were just talking about, we'd underweight really large cap value stocks here that are more domestically based.
Are there certain parts of the market right now which simply remain uninvestable, Rob, because there's just no visibility whatsoever to what's going to happen in the next couple of months?
Yeah, I think getting into the specific sectors of the S&P 500, we'd underweight more of the cyclical sectors. Some of those are commodity based, so they'd be materials, energy, industrials. You started off the show talking about how oil is looking right now, so that still looks pretty grim. But the defensive sectors, utilities, telecom, healthcare. They have a little more earnings visibility, and so those would be areas that we would focus on going forward.